Hi there, good morning. You're watching Market Cafe on ET Now with me, Snehisha. As usual, with me is Shreyansi Singh. Shreyansi, wishing you a very good morning. And well, this is a show where we're going to take you through everything that happened back home as well as globally when our markets closed right till today, this morning, in fact, this very point. And in the second half of the show, we'll also take you through all the stocks you need to be watching out for closely in today's trade, as well as what brokerages are flagging off for us. And well, let's kickstart the show with the global coverage then. And Shreyansi, US slightly mixed moves coming in, but NASDAQ continues to slip, isn't it?
Well, absolutely. And let's take a look at what really happened there, because when you take a look at futures, the kind of move that you're seeing is that Dow Jones Industrial Average Futures, you're looking at an advance coming in of about 0.2% thereabout. And when you take a look at S&P 500 as well as NASDAQ 100 futures, you're looking at 0.1% each gains coming in for both of these. Now, when you take a look at what really happened on Thursday, you do have the S&P 500 as well as the tech-heavy NASDAQ that slid by about 0.5% thereabout, and 0.9% respectively. So that's the kind of move that you saw for those two indices. When you take a look at the 30 stock Dow as well, you're looking at the index really bucking the trend and adding roughly 81 points, so just 0.2% thereabout. So that's the kind of move that we saw coming in. Now, in after hours trading, of course, you did have medical device maker Dexcom that plunged about 38%, and that is an important one to track really there. But then when you take a look at the broad market index, that is down 1.9% this week. So those are the kind of moves that you've seen coming in this week. When you take a look at NASDAQ as well, you're looking at a decline of 3.1% coming in there as well, and the Dow is also roughly down 0.9% week to date. So those are the kind of moves that we've seen, and that's the kind of trend that is emerging in terms of what happened this week. Now, stocks are of course poised to end the week with declines like I just mentioned, and adding to the previous session's steep losses by dumping some mega cap tech as well as artificial intelligence tied stocks. So that's the kind of handover that you're seeing, and the activity also seemed to be part of a slightly broader rotation into small caps as well as more cyclical areas of the market. So that's largely the trend that is playing out here. In terms of data sets, we're really just watching out for the June's personal consumption expenditures report, an inflation reading that's preferred by central bank policymakers as well. So on a monthly basis, headline PCE is expected to have grown by 0.1% and by 2.5% from 12 months earlier. So that's the kind of move that is expected. And that is really what is being penciled in there. The final Michigan sentiment survey is also on the cards, and that is something that the market is also looking out for. And on the earnings front, you do have Bristol Myers Squibb, Colgate Palmolive as well as 3M that are on the dock. So those are the ones to keep an eye on, Snehi. That really is the kind of handover that we're seeing emerge. When we take a look at the US markets, let's also take a quick look at the European markets then. And when you take a look at Europe, what you're looking at is that a slightly lower close is coming in when you take a look at Europe. So when you're taking a look at regional stock 600 index, you're looking at a provisional close of down about 0.7% there as well. So that's the kind of handover that we have. But Snehi, tell us what really is the picture looking like for oil this morning?
Well, absolutely, Shreyansi. So, slight positivity being seen on the oil front. Let's understand what has been happening over there. US crude oil, so this is WTI that I'm talking about, staged a comeback yesterday, rising nearly 1% to top that $78 per barrel mark after the second quarter economic growth came in stronger than expected for the US. Now, GDP in the US increased at a 2.8% annualized pace, beating expectations of 2.1% growth. On the flip side, you also had US crude and gasoline inventories that declined last week, so keep that in mind as well. And this indicated an uptick in demand. Oil futures traded negative earlier in the session amid concerns about the health of China's economy. Remember, the country's central bank cut rates twice in a week. US oil has also lost 2.3% this week, while Brent is down 0.3%. Let's dwell a little bit more on what's been happening in China, because that seems to be an important factor when it comes to the pricing of WTI as well as Brent. Now, the People's Bank of China slashed interest rates in an unexpected move on Monday, remember, followed by a surprise cut to its medium-term facility lending rate on Thursday as well. China's government also announced more stimulus to boost weak consumption, and China's oil imports were down 10.7% year over year in June, while the refined product import fell 32% during the same period. This is all according to customs data. So China is a main player when it comes to, as of now at least, it's a main player when it comes to pricing of oil and the move that we've seen in oil coming in. But as of now, when I take a look at my screen, WTI is at $78.27 per barrel. You have Brent that is at 82.36, so that continues to be comfortably above that $80 per barrel mark. But that is what it's looking like right now. Natural gas also 1.5% higher. That's also important to watch out for. Shifting focus, let's also take a look at what gold is up to, because gold prices on the flip side have slipped to its lowest in over 2 weeks yesterday as profit taking kicked in after gold's recent rally, while traders awaited US economic data that could offer more cues on when the central bank will cut interest rates. Remember, the PCE index, that is the Fed's preferred gauge of inflation, that will be out today, the personal consumption index, that is, so watch out for that as well. Now, spot gold has fallen 1.7% to $2,357 per ounce, having touched its lowest since 9th of July. So largely, this is what the move has been looking like on oil as well as gold. But Shreyansi, with that, also take us through all the events we need to watch out for today.
Well, absolutely, and there's lots there, Snehi, because there's a lot of events to cover. But first of all, let's take a look at India data. Then forex reserves is something that you should be watching out for. And from the US, you do have personal income, PCE price index, as well as Baker Hughes oil rig count data coming in as well. So keep an eye on that. Now, of course, that is going to be very closely eyed. And in terms of earnings, you do have from the Nifty companies, you have Cipla as well as IndusInd Bank, Power Grid, and Shriram Finance reporting its numbers. So all of those counters will remain in focus. Now, in terms of corporate action, there's of course Vedanta board that will be mulling second interim dividend payout as well. So that counter is going to remain in focus, and it's the last day to buy shares of Nuvama Wealth as well as Zydus Life, Aarti Industries, Coromandel International, Galaxy Surfactants, PFC, Rani Holdings, as well as RBL Bank and Sobha and Timken India to be eligible for dividend. So all of those counters, on account of that, keep an eye on them. And in terms of primary market action, then you do have Sunstar IPO that is listing. So that one will remain in focus. In terms of other news, you've got a host of things to track. So UP court ordering Rahul Gandhi to appear in a defamation case. That is something that will be in focus. And PM Modi will be visiting Kargil to commemorate 25th Kargil Vijay Divas. And that is something that will definitely be in focus. Now, Tokyo CPI as well as 2024 Olympics kicking off in Paris. That is something that we're watching out for, and that is something for the sports fans there, Snehi.
Absolutely, all eyes are going to be on the Olympics, Shreyansi. I don't know about you, but I'm going to be glued to my TV screen late at night now to watch all of those Olympics events lining up. But with that, let's kickstart the coverage this morning on all the important global stories. First up, let's focus on the United States and the economic activity that has been reported. Now, that has come in stronger than expected in the second quarter, boosted by strong consumer and government spending, coupled with a favorable inventory build. Real GDP grew 2.8% on annualized basis versus street expectations of 2.1%, and of course following that 1.4% rise in the first quarter. Consumer spending propels growth, remember, and personal consumption expenditures as well. They increased 2.3% for the quarter, up from the 1.5% acceleration that we did see coming in quarter one. Now, both services and goods spending too saw solid increases for the quarter. Now, Arnab Das, the global macro strategist EMAA at Invesco, talks about how he expects the US market to perform going forward. Let's go across and listen in.
The economy, notwithstanding the 2.8% number for Q2, does appear to be slowing down. On top of that, you've had these, as you've discussed, these earnings misses on from some of the Magnificent Seven, and of course, next week we have a whole series of further earnings releases from other companies in the Mag 7 and elsewhere. So I think the market is repricing a bit on those expectations. Plus, I think there's a kind of dynamic at work where if we're going to have a more resilient U.S. economy, perhaps depending a little bit on, or maybe even substantially on what happens in the forthcoming presidential election, we might have somewhat more reflationary, inflationary, somewhat lower growth kinds of policies coming through.
All right, then moving on, OpenAI announces a search engine called Search GPT, which aims to give users fast and timely answers with clear and relevant sources. The company said it eventually plans to integrate the tool, which is currently being tested with a small group of users, into its ChatGPT chatbot. The rollout could have implications for Google and its dominant search engine as well. Remember, since the launch of ChatGPT in November 2022, Alphabet investors have been concerned that OpenAI could take market share from Google in search by giving consumers new ways to seek information online.
Moving on, meanwhile, the tech-led sell-off on Wall Street drove record trading options on the tech-heavy NASDAQ 100 index. This index, which is about 70% of tech stocks, has slipped 7% from its July 10 record high in a tumble that has rattled the mega-cap names which have powered markets higher this year. Options trading on the index has grown as stocks have fallen. The NDX's 1-month average daily options trading volume has risen to 62,000 contracts a day, which is the highest ever according to Reuters analysis report. NDX options volume have leaped to a record high even as sequential options volume remained shy of the high hit during the market sell-off in October last year.
Alright, then moving on, after the latest budget, taxpayers will be able to save more not just under the new tax regime, but now the TCS, tax collected at source, can be adjusted against the TDS for salaried employees. Anurag Shah is here to break it all down for us. Anurag?
This year, if you got a new car or gone for a foreign trip, then you can increase your monthly salary after giving your TCS certificates of buying a car or foreign trip to your employer. So your TCS amount paid will get adjusted for monthly TDS which is getting deducted. So your overall salary will increase after the new provisions made in budget because for buying a car above 10 lakh rupees or for overseas tour or for remittance above 7 lakh, TCS is getting collected by seller. So the new provisions has made that TDS can get adjusted against the TCS. So people will not have to wait for 12-15 months for filing their return and take the credit back. So now only TDS will get adjusted against the TCS and the overall the monthly salary can increase because TCS will get adjusted for the TDS and people can increase their monthly salary.
All right, Anurag, thanks for that very helpful explanation coming in on the tax front post the budget. But on that note, we'll slip into a short breather on this edition of Market Cafe. When we return, we'll take a look at how the Asian markets are doing, and they're looking pretty good. So we'll take a more detailed look at that. But we'll be right back. You stay tuned. Hi there, welcome back. Still watching Market Cafe on ET. Now, as promised, let's take a look at what the Asian Pacific markets are up to as of now. Largely rebounded today after yesterday's sell-off. Remember, very deep cuts came in yesterday across Asian indices, and some of them even saw their lowest levels in a month yesterday. But as of now, looking rather mixed is what I would say for the overall Asian markets. But first up, let's start by talking about what Nikkei is up to, and this is Japan's index, of course. Now, in Asia, traders assess July inflation data out of Japan's capital city of Tokyo, which is widely considered a leading indicator of nationwide trends. Tokyo's headline inflation slowed slightly to 2.2% in July from 2.3% in May, while its core inflation rate, which strips out prices of fresh food, remained unchanged at 2.2%, in line with expectations. Now, the so-called core inflation rate, which strips out prices of fresh food as well as energy, this is watched closely by the Bank of Japan. This has fallen from 1.5 to 1.5% from 1.8% as well. So on the back of this, Nikkei opened positively, continues to be around those levels. The yen will also be closely watched today after it strengthened sharply against the dollar in the past week. The currency is currently trading at 153.56 against the greenback. As of now, Nikkei looking okay with a slight positive bias. 0.2% higher is where that index is. Shifting focus away from Japan, let's talk about what's happening in South Korea, because Kospi also opened with an uptick of 0.6%, and let's take a look at what Kospi is doing as of now. Continues to build on that momentum because 0.8% higher is where Kospi is, almost 1% gain coming in on that index as well. Now shifting focus to Australia, Australia's ASX 200 was up 0.8% in the morning when it opened, and as of now also continues to be exactly there. Not much happening for that index, but looks like it's comfortably in the green. That's Australia's ASX 200 for you. Shifting focus, let's also take a look at what Hang Seng and Shanghai are up to as of now. And Hang Seng as of now, a 0.6% gain is what Hang Seng. Oh, in fact, it has sharply spiked after that. More than a percent gain coming in for Hang Seng also as of now. Almost 200 points higher is where the Hang Seng is. And lastly, let's also take a look at what Shanghai is doing, because just a few minutes ago, Shanghai was in the red, but as of now also has flipped towards the green. 0.3% uptick coming in on Shanghai as well. Shifting focus back home, we shut shop at that 24,406 mark, just above that 24,400 mark yesterday. Implied open at 24,479. Which is an uptick of roughly 75 points coming in on the spot basis. So rather flattish start, but with a slight positive bias is what is being penciled in for us this morning.
Well, absolutely, and let's see how that pans out for us. Welcome back. Thank you so much for staying tuned in. Well, even after the budget is over, Finance Ministry officials are explaining how the different decisions taken are beneficial to taxpayers. In continuation of that, the CBDT chairman has explained how the removal of indexation will benefit the taxpayers, as well as provision of rollover of capital gains tax is still available. Listen in to what he had to say then.
This is under discussion. Ultimately, it's before the parliament. So the parliament would take a call on that.
On the issue of income tax, sir, now the review is going to happen in the next 6 months, as you said that. So that is going to be completed in the next 6 months. Sir.
Yes. Yeah. In the next 6 months, we will actually have a review of the provisions and so how to make it simple, how to actually present it in a more simpler way so that it is easily comprehensible by the common taxpayer, and the need for always taking help of the professional to the extent possible that is done away.
The index issue of real estate, sir, it's a fear which is in many property.
Actually, we have to see it not. It's just not a simple mathematics. It's also how the rates of the properties have gone up, and as we have also mentioned in the examples, given in the examples that if in the 10 years, suppose the property rate has gone up by 2.4 times or more, then the new tax regime is beneficial. Actually, the properties have moved that way, right? So it is not that we give example in a hypothetical manner. We have to see it in a contextual manner. That is how the property rates have gone up, right? And if they've gone up by certain folds, more than 2.4 times in 10 years, it is beneficial for the taxpayer. In any case, the rollover of capital gains is still available. So if a person is actually selling off the property and buying a new one, then it is neutral.
All right, that's the word coming in from the CBDT chairman. But Sumit also caught up with Shraddha Suri Marwa, the president at ACMA, to understand the trends in the auto components industry. Let's go across and listen into a slice of that exclusive conversation.
So the auto industry in general is doing well. There's been, growth in terms of domestic requirement. Exports have grown. The aftermarket has grown. The government has come out with many schemes and policies which have supported us. The focus is make in India and design in India, not just for India but for the rest of the world. And we are working on that.
What are the major challenges on the horizon when we talk about this financial year and the outlook for the component industry? What we saw last year, will you be able to continue this year as well?
So far the numbers look good. The only challenge that we see is on the logistics front, and that is beyond our control. There is an issue that's happening on the western part, around the Red Sea. Routes have increased, and on the east as well. Right now there's a lot of congestion. So the movement of goods, both incoming and outgoing, has gone up, and which is impacting working capital. But other than that, not seeing any major challenges.
Any likelihood of or giving an understanding when this whole issue would be resolved, or what the overall steps taken by you to mitigate the losses there?
So, I cannot give a time horizon for that, but what we are encouraging, and the government also wants the industry to do, is actually localize more. The more you localize, the less dependent you are. But we'll have to just, it's not just our country. Everyone's impacted by it. We'll have to wait and watch.
And one issue is the high inventory at dealerships.
Yeah.
Many automakers have expressed concern. Well, as an auto component maker and representing them, is it a matter of concern? Because if the cars don't sell, really it's going to be impacting you as well.
So there is an inventory pile-up that is happening. However, if you look at it historically, H1 is always lower than H2 for in terms of sales, and we build up inventory for the festive season, and it gets liquidated. So the OEs have not really reduced, production numbers as we understand at the moment. We're hopeful, it'll all get liquidated.
Alright, then let's keep it going with Motown. Japanese auto major Nissan is looking to reboot its operations in the fast-growing Indian car market. The company is now looking to introduce 5 models over the next 30 months, and the company has also unveiled the latest version of its premium SUV X-Trail, which will be imported into the Indian market as a completely built-up CBU model. ET now caught up with Nissan India's top boss to understand the strategy in the Indian market. Listen in to what they had to say.
X-Trail is the first product of our offensive in production in India. It will start. We will continue with a new facelift of Magnite, and we already announced the production and sales of 3 new models, which are 2 SUVs and 1 EV. And this will complete our lineup during this MTP midterm plan, which we call ARC from Nissan Global, already announced, where India is playing really important role in the center. And we will not only use India as a domestic market, but also we use India as a hub for export.
And sort of to you now, what about the overall market? Well, you have been in the market since long time. But is it going to be the festival season better than last year? Is going to be as good as last year? What is the overall outlook on the market? What you feel like?
I think from a market perspective, the Q1 of this fiscal has started, which is slightly slower than expectations, and multiple reasons there, which we've witnessed in the Q1. However, the festive, of course, the expectation should be buoyant, and that's what the entire market's looking forward to. And the monsoon will also kind of define what is the overall economic scenario in the country, and therefore how does it shape up. But of course, the expectations from the festive season, which starts from August onwards, are buoyant.
Though it is a product which caters to premium brand, the market seems to be different, behaving different nowadays. So your strategy going to be as far as Nissan is concerned, mid to premium, or maybe coming back down to only premium? What is the strategy going to be when it comes to positioning of products?
I think clearly we're looking at the business in a 3-pronged strategy. One is that we are going to focus on the domestic business, and we've shared a lot of details on the domestic business and how we're going to multiply it with the refreshed Magnite, 3 new models which are going to come in. The second is the focus on our CBU business, which we are relaunching, and X-Trail is a part of that CBU business. And the third is going to be our focus on exports, like Frank mentioned during the ARC period. So theoretically, between 24, and we are middle of 24, and 26 financial, the domestic business is going to multiply by 3, and the exports is also going to cross close to 100,000 units. So that's almost 200,000 unit business that we are looking at.
All right, let's get a move on away from that. Then RBI yesterday came out with some very important regulations. They've issued a draft circular on the Basel III framework on liquidity standards, which will require banks to set aside more funds to cover their risks. My colleague Ankur joins in with more details. Listen to what he had to say about the analysis of the impact of this regulation and that could have on the banks as well. Listen.
Yes, Reserve Bank of India has issued fresh draft guidelines on LCR framework. Now, these tighter liquidity norms have been proposed for banks, keeping in mind a situation where large digital withdrawals are happening in banking system. Now, with the advent of technology, there can be a situation where large digital withdrawals happen, and to arrest that kind of a situation, or more so, prepare banking system for this kind of a situation, there are proposals that 5% additional runoff factor should be there for banks if at all retail deposits are linked with internet and mobile banking. Now, what are these proposals in detail? If the deposits are linked with the internet and mobile banking, the 10% runoff factor should be there. Minus the internet and mobile banking, that can be 5%. Apart from that, unsecured wholesale deposits will also be treated like retail deposits, and that situation has been specified. Also, the G-Secs needs to be valued at current market rate, and that has been proposed in the norms. And as far as the applicability of these norms are concerned, this should be applicable by 1st of April 2025. However, this is just a draft circular, and suggestions can be given by next month, that is in August. Now, all in all, it will depend on the market feedback before Reserve Bank of India finalizes the final norms for LCR framework.
All right, thanks Ankur for that update coming in. Moving on then, how does this move impact banks and what are their liquidity positions like? Gaurav is standing by with that update.
Well, yes. When we talk about RBI circular, now we know that the RBI is being a little prudent when we talk about the liquidity coverage ratio, as they have proposed additional 5% runoff in retail deposits, almost 10% runoff in the stable retail deposits, and 15% in less stable retail deposits, which are created from internet banking and mobile banking services. Now, first let's consider what is runoff factor when money is deposited from the depositor, which is being taken away from the depositor before the time which was anticipated by the banks. Now, they have also proposed another factor is that the level 1 HQLA, which is high quality liquid assets in the form of government security, shall be valued not greater than the current market values. And if you look at the impact, now brokerages are coming up with the impact. First, we have Nomura, who has actually highlighted the banks who has higher LCR ratios. In that criteria, we have higher LCR ratios as well as higher retail share in the LCR ratio. So first, Nomura highlights that the proposed norms is going to impact the LCR ratio almost by 11 to 19%, and they also believe that the LCR drop will be sharper for the banks with higher proportion of retail deposit. If we talk about banks who has retail deposits, the first one comes up at Federal Bank, the second is as SBI, HDFC Bank, BOB and ICICI banks are some of the banks who Nomura has highlighted has higher retail deposits. Other than that, they also are anticipating higher impact on Federal Bank, followed by Bank of Baroda, SBI, Bandhan Bank and Kotak Mahindra Bank. So definitely watching out on all these counters on the back of the RBI circular that has come out yesterday.
Gaurav, thank you so much for taking us through that important update coming in. So a bunch of banking stocks are going to be in focus on the back of that RBI circular that has now come on the tightening of liquidity under the Basel III norms. But moving on, let's also talk about another stock that's going to be in focus today, and that is going to be Mankind Pharma. This one is going to be a key stock to watch out for today because they have entered into a definitive agreement to acquire Bharat Serums and Vaccines for 13,630 crore rupees. So that's the news maker that has come from Mankind Pharma. This deal is valued at roughly 8 times of revenue and roughly 28x of EV EBITDA. So valuation also is slightly on the higher side. But let's understand why Mankind has gone ahead and inked this deal. What is the rationale to buy the portfolio? And this is done to get a foothold into the complex portfolio of women's health, fertility, critical care, and the immunoglobulin segment is an important one that Mankind wants to make a mark, and strategic move towards establishing the company as a market leader in Indians' women's health and the fertility segment. So these are the factors or the rationale that has driven Mankind Pharma to go ahead and ink this deal with Bharat Vaccines and Serums as well. Now, talking about Mankind's recent fundraise in May, the board has approved equity fundraise of 7,500 crore rupees. They've also increased the borrowing limit up to 12,500 crore rupees, and the company also had a net cash balance of 3,250 crores as of 31st March of this year. But let's quickly take a look at what brokerages have to say on this deal. Axis Capital View has come in on this deal. They're saying this acquisition is not a surprise, as Mankind had stated its ambition to get into the high entry barrier therapies, and given Mankind's strength in the women health and complementary portfolio, they see scope of cross-selling leading to revenue synergy. So positive note coming in, but they're also saying that EPS accretion is unlikely before mid FY28 compared to the management guidance of reaching that mark by FY27. So that's Axis Capital's view on this deal. But well, yes, Mankind Pharma is a stock that you must closely be watching out for in today's trade.
Well, absolutely. So we'll keep an eye on Mankind Pharma in today's trading session. But for now, let's take a quick break. When we come back, we'll take a look at some more news and updates, so you don't go anywhere. Welcome back. Thank you so much for staying tuned in. Well, let's get a little stock specific and take a look at Tech Mahindra because they've reported an inline set of numbers in the first quarter. When you take a look at revenue, you're looking at an inline set coming in, and same can be said about EBIT margin as well as profit after tax. Revenue did see an uptick of about 1% on a quarter-on-quarter basis, and on the profit front, there was an uptick of 28.8% on a quarter-on-quarter basis. So that largely is the handover coming in terms of what the earnings fine print looks like. For Tech Mahindra, in terms of deal wins, they did have that figure at $534 million. And the CC growth or constant currency growth was at 0.7%. Attrition was there at 10%, and that is the kind of picture that we're seeing for this one. But let's also listen to what the management then had to say about the deal wins.
I wouldn't say that there has been a massive change or a massive upswing from a demand perspective. I do feel that for TechM, for us though, we are, I feel, more stable and more settled into a new organization structure. So probably allows us to take a better opportunity of the, the market opportunity. But the market is more or less the same. Maybe it has improved from a year ago, but certainly from 3 to 6 months ago, more or less the same. I feel that on your question about the deal wins, right? I'm actually quite happy with our deal wins. It's 534 million, which is a significant improvement on our YOY number and also a significant improvement on our QOQ number. I do feel that we have been selective about the deals that the large deals that we play in, and that has been a factor. I also feel that we have been very stringent about how we recognize and report large deals, right? So our large deal number goes through a huge level of internal scrutiny before reporting it.
All right, and that was a word coming in from Mohit Joshi, the CEO and MD of the company. But let's also take a look at what the brokerages had to say about the counter then. You have UBS as well as Citi maintaining a sell rating, and they've also hiked the target price. So UBS has hiked it to 1,250 and Citi has hiked it to 1,260. But let's also take a closer look at what they had to say then. When you take a look at what UBS said, they're highlighting that there's a good start to the new strategy that they've seen come in. In terms of valuation, they do see the valuation versus execution risk for the counter, and that is something that they're also flagging. But in terms of the financial year 25 guidance, that remains unchanged for UBS. And there's a positive outlook that they have for BFSI as well that they're highlighting. Lastly, let's also take a look at what Citi had to say then. And they're talking about how TCV trends still remain weak. And that is something that Citi is highlighting about Tech Mahindra. And they're also talking about how the 12.5% EBIT margins for financial year 26 estimate consensus is really something that they're flagging out as well. In terms of the SG&A-led margin improvement, that is something that they're also seeing on the cards for Tech Mahindra. So that is the verdict coming in from Citi as well. Both UBS and Citi maintaining a sell rating and hiking the target price, and that's the verdict coming in on Tech Mahindra.
All right, so Tech Mahindra also going to be in focus on the back of those numbers that came yesterday. But now let me take it across to my colleague Ansh, who's joining us to watch out, to tell us about the levels that you need to be watching out for in the new series. So what's in store for us and what should we be expecting going ahead? I'm going to take it across to him. Ansh, take it away.
Sure. So if we talk in earnings terminology, then decent set of numbers for July series, not very exciting, not very positive, just neutral. If we talk about Nifty, then the move which we are seeing in July series was 1.5%, have been advancing for second consecutive series. But if we talk about Nifty Bank, that has been negative by 3.7%. Now Nifty Bank will be expiring next week actually on 31st July. If we talk about rollover data, then Nifty rollover is almost around 70%, which is near its 3 series average only, which was around 71%. So here also it's a neutral stance over here. If we talk about FII, then in index future, we saw that at the start of the July series, the long position was around 82%. That has come down to 56.8%. So here we are seeing that the strong bullish sentiment has normalized a bit. If we talk about the total long position, then at the start of July series, it was 3.2 lakh contract. Now it is 2.6 lakh contract. Let's talk stock specific as well. And we are seeing that in July series, only 54% of F&O stocks advanced. So nearly not even 100 stocks were in green in the previous series. If we talk about rollover data, then Chola Finance, Indigo, Atul, Power Grid and SBI Card had the high rollover, whereas ITC, Grasim, Deepak Nitrite, PEL and Berger Paints were having low roller data. Now, if we talk about the August series data, then we have started the August series data on a negative note by starting on a short build-up position actually. But if we talk about the August series seasonality data, we have collected data of last 5 years of August series, and as per that, we are seeing that 3 out of 5 series were positive, giving an average move of around 1.6% on an average basis. So this is a positive sentiment for the coming series.
All right, then thanks, Ansh, for joining us with that. Pharma's major Cipla also reported Q1 earnings, also has Q1 earnings that are expected. So let's also take a look at what Srishti is talking about what exactly the street is penciling in when it comes to that one.
Well, we are expecting a good set from Cipla this time around because generally Q1 is a strong quarter for Cipla. Let's talk numbers then, and on the revenue figure, we are expecting a jump of 7% on a YOY basis, while the EBITDA is expected to show a growth of 9%. But the key to watch will be the margins indeed, and 24.1% is what we are expecting on that particular front. Onto the profit figure, we are expecting 1,071 crores, and onto the segmental performance and the geography-wise performance, India business is expected to show a growth of 7% on the YOY basis. When it comes to the US markets, there too we are expecting a steady growth. And this time the growth will be supported by the market share gain in some of their key products, as well as the scale up in already commercialized product is what we are expecting. Even the South Africa business is expected to show a growth of 7% on a YOY basis. So all in all, a good set expected from Cipla, but the key to watch will definitely be the management commentary on the US pricing, as well as the demand that the company is looking out for in some of their key regions, and the margins guidance indeed. And lastly, we'll also look at for the commentary on the site transfer of their key products is one of the other key monitorables. So all eyes on Cipla.
All right, all eyes will be on Cipla coming out with its numbers, but Jinay is also standing by with a list of all the other stocks we need to be watching out for closely on the back of either their earnings or individual news flows. Jinay, good morning. Take it away.
Well, as good morning, Snahi. So first up, we'll start up with earnings. Jupiter Wagons reporting a good set of numbers. Revenue seeing an uptick of about 17% coming in at 880 crores, whereas net profits saw a significant uptick of about 46% reporting at 92 crores. Moving on, EU Small Finance Bank inline side of numbers, the NII saw a growth of about 54% year-on-year basis, whereas net profit seen an uptick of about 30% coming in at 503 crores versus 387 crores on year-on-year basis. Moving on, weak results from VST Industries. The net profit saw a downtick of about 36% coming in at 54 crores, whereas the revenue saw a downtick about 4%. Also, keep an eye because board has also approved an issue of bonus shares with the ratio of 10:1. Moving on, BL Kashyap and Sons will be in focus as company has got orders aggregating up to about 160 crores. And lastly, keep your eyes on SJVNS. Company has received LOI for a certain pumped storage project from Government of Mizoram with the cost of 13,947 crores.
Thanks, Jenny, for joining us with that list of stocks that we should keep an eye on. But with that, we're completely timed out on this edition of Market Cafe on ET Now. From me, Shreyanshi Singh, Snehi Shah, as well as the entire team that put this show together, thank you so much for tuning in. You don't go anywhere because the market takes all of the action forward.
If you like this video, then like, share and subscribe to ET Now.